Hi, my name is Katherine. I'm an investment advisor with FSMOne. Today, I'm going to share with you some of my favorite bond ideas on the platform. So, not all bonds require $250,000. There are some retail bonds offering that are listed on SGX, which only require a minimum investment amount of just $1,000. Even myself, as a non-accredited investor, can also invest in these bonds in smaller quantities and be rewarded with better than average yields. One of the retail bonds is listed on SGX is guaranteed by Frasers Property Limited. The group has a total assets of approximately 38 billion as of end March 2020. I like that their property portfolio is diversified across 70 cities in Asia, Australia, Europe, the Middle East and Africa with large customer base. Recurring income assets makes up more than 80% of the group's portfolio. And in the first half of financial year 2020, recurring income forms 63% of the group's profit before interest and tax. Currently, these retail bonds carry a coupon of 3.65% and has about a year and a half until maturity. The indicative bond yield to maturity is approximately 2.48%. With Frasers' strong operating track record, this bond is worth considering for retail investors. Another bond which I like is issued by our national carrier, Singapore Airlines. Despite the pandemic, they have strong support from Temasek Holdings, a major shareholder with 56% stake in the airline, and they have successfully raised 8.8 billion via rights issues and convertible bonds earlier this year. Our Transport Minister, Mr. Ong, has also reiterated the government's plan to revive Singapore as an air transport hub and provide support for our flag carrier. SIA has a strong track record in financial discipline prior to COVID-19, and they are likely to continue to receive state support. With establishment of green lanes and air travel bubbles, we do see these factors as a credit positive for this issuer. These SIA bonds carry a coupon of 3.03% and has about 3 years and 4 months until maturity. Currently, it is trading below par at about 99.8, translating to a yield to maturity of 3.07%. Considering the handful of retail bonds that are left on SGX, this bond provides one of the highest yields amongst them. Last but not least, I'm going to share with you a wholesale corporate bonds which I like. This bond must be invested with a minimum nominal value of 250,000. Alternatively, if you are an accredited investor, you can invest in a smaller nominal value from $5,000 onwards through our Bond Express platform. This bond is issued by none other than Singapore Press Holdings Limited, an issuer that should be familiar to all of us. I believe we would have read news or articles published by The Straits Times or listened to SPH radio stations such as UFM 100.3 and KISS 92 FM. In recent times, although its advertising and publishing segments have been declining, the company's other segments have been increasing their revenue. These segments include their property investments like SPH REIT, student accommodation assets in the UK, Germany, and Seletar Mall, Woodleigh Residences, and aged care facilities in Singapore and Japan. SPH also enjoys revenue from various stakeholdings in business venture, including M1, My Chance Preschool, and KBS US Property Prime Management, which manages Prime US REIT. The bond I like is a perpetual bond carrying a coupon of 4.5%. For those unfamiliar in investing with bonds, perpetual bonds are basically bonds without fixed maturity date. To put it simply, we never know when we will get back our principal, as the decision to redeem the bonds lies with the issuer and not the investor. This might sound daunting, but do let me explain further. For this type of bond, it is common that we will notice information such as call dates, coupon reset dates, and coupon reset rates. Call dates allow us to know when the company will make a decision on whether to redeem the bonds or not. As not all perpetual bonds have a coupon that is fixed for its entire lifetime, we have to know when the coupon rate will reset and at what rate would it be based on should the company choose not to redeem them. For this particular SPH 4.5% perpetual bond, the first call date is the same as its coupon reset date, which falls on 7th June 2024. What I like most about this bond is that it comes with a coupon step-out rate of 1%. This means that should SPH not redeem the bonds in June 2024, there will be an additional 1% on top of the prevailing interest rates. Currently, this bond is trading at about 100.7 with a yield to us of 4.28%. With their strong track record in accessing capital markets and existing credit facilities with the banks, they should have no difficulty meeting its current debt obligations. I hope this short clip has provided you some good insights to investing with bonds. Do feel free to approach our investment advisory team should you wish to learn more before starting your investment journey with us. And we look forward to hearing from you.